Alright, welcome back. This is video 9 of the series. Okay, so as we're getting further along, I'm going to start adding less onto the charts. Okay, and I'm going to start to slowly transition into the target identification phase. Okay, so that's going to be another part of this series. Now, if you've not already seen the basic training video, I'm going to link that in the description below. You need to go back and watch that video in order to better understand what I'm talking about in these videos. Okay, so it's going to go through the 4-step trade plan that I have. Okay, so it's a 4-question process. So have we got equal highs and lows? Have they been ran? Has there been a price rejection, and have we had a break of structure? Okay, so that's the 4 steps to my trade plan itself, right? So like I said, if you haven't already watched that video, go back to basic training and then go through the series one video at a time. It'll better explain what I'm talking about in this one. Okay, so like I've said in previous videos, I want to try and draw less and less on the charts for those who've gone through the whole series, so they can start to look for themselves as the chart's playing out. Okay, so in this video then, I'm going to start looking at targets or potential targets, right? So if we're going to be looking for levels of interest, you want to look for equal highs and lows. Okay, so if we do manage to get a break of structure and in a long direction, bullish direction, these are the sort of levels you want to be looking for. Okay, so clean highs, clean lows. All right, so I'm going to continue with the video now. I'm going to pause it throughout and start to explain how it's all playing out in the process. Okay. Alright, so like I've said in previous videos, pay attention when you get flat spots in the market like this, levels of support. Retail are going to be getting in on this long with stop losses below. We're looking for a drive through the stop losses. So if you are always trading double tops, double bottoms, bounces on support, you're probably going to find a very low success rate in your wins, right? Because the market's designed to take liquidity first before moving off, right? So as this all plays out, you'll start to see it. Okay, so I'm just going to drop a line on this point up here as a level of interest. Okay. Then what I want to show here is, if you look at these levels here, can you see the bounces all the way along here? Okay, so you've got a bounce there, one that comes just short there, bounce here, then we pulled off there. Okay, so you're going to start getting selling interest there. You can also see levels of support here. Okay, so look how it's building up. Buyers and sellers, top and bottoms, with stops above and below. Okay, so finally we drive through support. Okay. So we've taken out anyone who went long here, we've taken their stops out. Okay, now we've got this large level right here. Okay, so this is a level of interest now. Okay, so there's anyone who's gone short here is going to have stop losses above the market here, and you've also going to have some stops sitting here. Okay, so these are quite strong areas of interest if you're looking for targets. Okay, so as you can see here again, we're starting to put in support. Same again here. Okay, so every time someone tries to call the bottom, they're just going to get taken out. Okay, we have a final drive through there then. Okay, now this is what we're looking for. Okay, so if you look at the difference up here, we had drops, and then it sort of consolidated around here, put some highs in here, then we had a drop through these lows here. Okay, so anyone that was trying to call the bottom here to go long has been now been taken out. Okay, then we had a small bounce here. Anyone that tried to go long based on this bounce here, stop losses below got taken out here. Okay, now we had another bounce here, and then this was seen as a double bottom here with stop losses below. Okay, now we had a drive through that, and look how fast price rejected then broke structure. Okay, now this is the pattern that I've been teaching in the series, all the way through the series. Okay, and it's an important pattern because it relies on a run through stop losses and a breaker structure in the opposite direction. Okay, now as I've said in previous videos, the break of structure then, so we had this level here which was the last high point. Okay, so that was the last high before it went through the stops. Okay, so that's the last point of structure. Okay, you could say you've got a small double top right there. Okay, now I always like to see from my setup, purely from a place to put my stop loss, I like to see a little bit of structure before the break. Okay, so in this case we had this down candle here. Okay, I'll zoom in a little bit here. So this black candle here before the structure broke fully. Okay, so that would be my level where I'd be looking to get in. Okay, so going through the 4-step process in order to get the entry. Alright, so have we had equal lows? Yes. Have they been ran? Yes. Have we had rejection? Yes. And have we had a breaker structure? Yes. Okay, so that's the 4 steps that I need to give me a high probability setup. Now, like I said in one of the earlier videos, it's not always 100%, but it's very, very high probability because you've already had a run on stops and the move is now showing the market's taken that liquidity and wants to move in the opposite direction. It doesn't mean it's going to move in the opposite direction for a long time. You could just get a temporary reversal, but when you've got a setup like this with areas like this above it, or vice versa for a short position with areas below it of interest, you're going to be targeting these levels. Okay, now once we get this entry, you're going to see how fast it starts to move towards these levels to try and take the stops before traders have a chance to get out. Okay, so like I said, I'd be looking for a position on this black candle here, okay, with a stop loss below it. So that would be my entry. Okay, and I'd be looking to target these points. Right, so this is the first video that I really started to explain a little bit more about targets. Right, but as a series goes on and on, once I get to video 15, I'll be going into a lot more detail about these targets, and I'm going to do a target identification series, which will only be about 3 or 4 videos as well. Okay, so anyway, that's going to be my entry. Okay, stop loss below. Okay, that's the entry right there. Okay, so these 2 points here, that would have been entered into market with the stop loss below. Okay, what I want you to do now is focus on these 2 points here. So these are them highs that we'd be looking to target, okay, with the stop sitting above. Now it's really important as well that you don't move your stop loss too early. So I like to leave my stop loss in place pretty much until we're almost at target. And you'll see why, because you can get a lot of messing about as they're targeting other stops on the way up. Okay, so from a normal trading perspective, okay, let's say you did move your stop loss to here. You wanted to trail your stop to try and secure some of that profit. So let's just say you moved your stop loss to there, okay. Bear in mind my stop is still going to be sitting underneath here, okay. So I'm not going to be moving my stop. So that's my stop, and then this is going to be a trailed stop, okay. You can see these lows here. Now, no matter what goes on in this area, we're still looking for these upper targets, right? So you've got to leave it play out. Okay, so look what's going on here now, see? So we've now got these equal lows here. Okay, so let me just find this. Okay, so I'm going to try and highlight these a little bit more. Okay, so we've got these equal lows here. Then we've also got now equal lows here. Okay, so we're starting to put in some support. So what you get there, you get traders coming in the market, buying the market, going long, and they're putting the stop losses below. Okay. If you look at this now, we're putting in consolidation. So what are you going to get here? You're going to get sellers in the market, okay, with stop losses above. Okay. Okay, so anyone that was short here now with stop losses above has now been taken out. Alright. Now all along we're looking to get to this target. So like I said, it doesn't matter what happens in this section. Okay, our stop loss is still down here. Okay, so we've got our risk on the table still. There's lows here, so they're going to have stops here, and there's lows here, there's going to be stops sitting under there, okay? And we're still looking to get up here. Right, so remember my stop is still sitting down here, okay, in the original position. Now if you had trailed your stop to there, you would have been taken out, and also these here have also been taken out, okay. So this is why you don't want to move your stop loss too early, okay. So this is the position, this was the entry point here, okay. Targets are up here, we've still got our risk on the table. So what the market's basically done here is taken out all the liquidity underneath here and bought them positions, bought them stop losses in order to push the market higher. Remember, we've still got our targets up here. Okay, so there's our targets there. As you can see, price continued to push through it. Okay, so if I zoom right out, this is what we were looking at as a whole. Okay, so all along we were looking for this target up here, and it did get to that point. Okay, we also had this full level of resistance here, so retail would again been getting in short on that. That was taken out here. Okay, now our position was based all on that same pattern that I talk about in all these videos. Okay, so the same concept. You got to have the run on stops, so equal lows, run on stops, break a structure, get in on the retest. All right, now if we had taken this trade, okay, and we got in at that exact point with the stop loss below, let's have a look. That would have been the entry. Our stop would have been sitting there, and our second target would have been this point here. Okay, so it's a 16.46 to 1. Okay, so if you're risking 1% of your account, you'd be looking at nearly 17% growth in one trade, right? Now, although this is all about the setup and the trade itself, I have incorporated targets like this, but I also wanted to explain the importance of not moving your stop loss. Okay, so if you had trailed the stops, as you can see, anyone that went long on this with stops below, or long here with stops below, both of them got taken out. Okay, when the original move was always from here. Okay, so this was the run on stops, and then from that point then we were just looking for continuation all the way up, right? So if I remove all the drawings, okay, and then remember that the breaker structure, okay, so it always comes back to the structure itself. See it? So there's the break, reacted off there, reacted, okay, and when it came back down again, it came down for one more attempt there. Alright, now this could have been scary if you were watching this on the charts. This could have been scary, but if you stick to risk management, you're not going to be risking too much of your account. Okay, so your emotions should be a lot less. Now, if you've got a stop loss down here that's risking 20, 30, 40% of your account, this entire process is going to be a very, very emotional ride. Okay, when you get something like this, the chances are you're probably going to close your trade before it hits your stop. Right, so, and all along it did get to our target. Okay, so that is it for this video. This was on silver, so XAGUSD on the 15-minute chart, and I just wanted to do this video on silver just to show that the process still works on metals as well. So I've done, I did XRP in the first video, done a lot of Forex. Here's one on metals. I've done one on oil. All right, so just to show you that the pattern itself does work on all different asset classes. Okay, I will see you in the next video.